Tesla's stock have been surging higher recently and its price has doubled year to date. Over the last 30 days alone, Tesla shares have risen 43%. Wedbush analyst Dan Ives seems to think the stock could trade much higher 12 months from now, boost his price target for the stock from $215 to $300.
And I think when you look at the supercharger perspective, from a revenue perspective, you go out 2025, GM Ford, they get 15% share. You're looking now an incremental of $3 billion, $4 billion a year of revenue that was not there. And I think what's starting to happen right now for Tesla, from batteries to supercharger to storage, the sum of the parts thesis is now starting, I believe, in the early stages to play out with investors. That's really what's starting to happen now with the stock, in my opinion.
There is another theory that, yeah, he got them on the network and he got them on the technology, but that design, they have 100 years of refreshing designs with high frequency, and in the end, that's going to mean better unit sales for the legacies than perhaps the Teslas. What do you think? Yeah,
my view is that Musk needs GM and Ford actually be successful for the broader EV vision in terms of just adoption in the United States.
Move the adoption curve higher.
And it's the jobs thesis, in other words, like from Apple, and I think that's really what's starting to play. And that's why right now you're seeing Farley and Mary ultimately partner with Musk, because I believe this is just the first step. It's starting with superchargers. And ultimately, I think next step could be batteries technology. And I think that's the golden goose right now, is that they've built the castle, waiting for others to call. Farley called, Mary called. And I think it's just the start of what I view, especially with demand I view it stable in terms of, what we saw coming out of our Asia checks being in Asia the last few weeks. Margins, I think now are starting to trough out the next 1 to 2 quarters. And I think that's why investors right now are really starting to look at this in a different story.
So explain to our viewers just the revenue opportunity from these charging stations. How does Tesla make money from them? What are other opportunities that it has from all these cars stopping at these stations?
So 12,000 supercharger network. And when you start to think about it, they're really the only one. That's why range anxiety, why would a Jim, a Dave, a Sarah not buy an actual technology? Why would they not buy EVs? It's because of range anxiety. So now supercharger, Tesla has it. They basically they make per charge. Now from a revenue perspective, services, we think by 2024, it's about $10 billion that we're talking about annually revenue, margins much higher than autos. So that's almost like software-like margins. Now, GM Ford, you get, let's call it 1 million cars on that network. That's incremental in the billions, 2, 3, 4 billion per year that was not there on an annuity. And I think that's why what you're starting, the reason I call it an AWS moment is I think for many years, AWS not really valued from an Amazon.
Right.
Now all of a sudden,
you can throw a pretty high multiple on a recurring revenue stream like that, right?
Apple services, okay, I'll assign $100 billion. You go back years ago, today, we think it's worth $1.4 trillion. So that's why I view it in terms of the reason I believe Musk is playing chess and others are playing checkers, you're now starting to see it play out.
Both Ford and GM customers can buy a Tesla-made adapter that will allow them to access more than 12,000 supercharges starting in early 2024. And in 2025, Tesla's unique charging port will be built into Ford's and GM's electric vehicles. Cathie Wood, ARK Invest CEO and a longtime fan of Tesla, thinks that these new deals will have a huge impact on the EV industry. Cathie Wood said that this deal will move the industry closer to accepting and implementing a single charging standard, which could accelerate the popularity of EVs.
It is a very big deal. Joining us right now is ARK Invest CIO and CEO Cathie Wood. Tesla is, of course, the top holding of the ARK Innovation ETF. Cathie, we were discussing this just in the last hour. It's a remarkable thing I was listening to Spaces yesterday, Twitter Spaces, Elon Musk with Mary Barra, someone who has, it has been very hard for her to even utter the words Tesla over the years. And here is this partnership. What does it mean, do you think, long term, both for Tesla, but also for the legacy automakers, GM and Ford?
Well, I think it's great for America and our transition to the electric future, as Elon said. And I do think it increases the probability that our forecast of 60 million electric vehicle sales by 27, it has increased the probability that that is right. We had globally 7.7 electric vehicles sold around the world last year, going to 60 million, and is going to completely dominate the industry. And I think having both General Motors and Ford on this charging network, which is the big gating factor, range anxiety, gets us there that much faster.
So I think there's two questions. Some people would say great long-term, short-term and long-term for Ford and GM. Everybody's a winner in this. There are others that are concerned that say maybe great for Ford and GM short-term. I think there's almost no question about that. The question is what happens long-term if effectively two of the largest American automakers are effectively driving sales effectively to Tesla, both in terms of the electric power piece of it and effectively the advertisement that is a Tesla charging station, what that means long-term in terms of Elon Musk's ability to sell more vehicles, potentially even at cheaper prices.
You know, this reminds me of what happens with most technologies that proliferate and scale. There's a standard, and here we have a charging standard. Charging solves the range anxiety problem. And what's also very interesting about this is it does help Tesla underwrite the charging station expense, because if you look at Tesla's sales, they are highly concentrated on the coasts. Now it's going to make a lot more sense for Tesla to roll out charging stations that much faster throughout the country.
Right. How much of their revenue and profits do you now imagine over time will be a function of the infrastructure part of their business versus the automobile manufacturing part of their business?
Well, actually, we think another revenue source is going to be much bigger. And of course, that's the autonomous taxi platform. And we think it's going to drive the valuation because the margins associated with autonomous are going to be SaaS-like. So instead of electric vehicle gross margins in the 25 to 30% range, we expect autonomous, the platform strategy, to deliver 80%, 90% margin. So the combined will be north of 50%.
In terms of the grid, though, that they're building and these charging stations, you think that's a small part of the business? Yeah, and the services that they may be able to layer on at some of those stations?
We have not counted. So we are in print at $2,000 in 2027, and we have not counted the possible revenue sources associated with this strategy. And we haven't even done much in the energy storage business away from electric vehicles, because we think the most valuable part of the business will be the scaling of vehicles to create this autonomous taxi platform.
Tesla sold more than 1.3 million vehicles globally in 2022 and aims to sell at least 1.8 million in 2023. Tesla dominates EV sales in the US and, not surprisingly, is conquering reliable fast charging. Selling a car is one thing. Selling consumers an EV charging experience is another, and one that provides an ongoing revenue stream.
You said GM and Ford, they don't want to be in the, quote, gas station business. They don't care who pumps the gas. In this case, the gas is electricity. They want to go with the leader. How big of a deal is this?
Brian, that's exactly the point. This is a major deal. For consumers, it gives more charging stations. But at the end of the day, the big news is the Tesla charging port, because that is going to force everyone to think about adapting this port, including the U.S. government that's currently investing billions of dollars to build out the EV charging network. It has been a thing of Biden's to build out this network, and this is really going to throw kind of a screwball at them, trying to figure out if they should do CCS or go to the Tesla standard. And the Biden administration and Tesla have not always had the best relationship. And you also pointed out the EV startups for the chargers. They're down right now because they're going to have to adapt or die.
Well, and for our viewers that have not driven electric cars, there's Tesla, and then there's everybody else. And everybody else is on that CCS standard, and there's different speeds and all this other stuff. It's kind of one of the hurdles. I think with this, because, you know, there's 3 levels of chargers. If you've got an EV that's not a Tesla. And I think with this, GM and Ford realize, what are we doing? We don't want to rely on third-party companies to build out the infrastructure necessary to sell our cars. And guess who's done it better than anybody? That's Tesla. Did Elon Musk just corner the market in charging for electric cars? Checkmate.
As of right now, yeah. I mean, it was a great play by Elon to say that he's going to open up the charging network. He's also licensing other technologies. And when you think about this, GM and Ford are trying to catch up to Tesla. They have been trying to catch up to Tesla for years now. They've been slow to adopt EVs, and now they are doing kind of a shortcut, and Tesla's helping them. Mary Barr earlier on CNBC said that they're thinking that they're going to save up to $400 million off a previously announced $750 million investment to build out EV charging. And they're doing it, we believe, at no cost.
Yeah.
They're partnering with Tesla. They're going to have the consumers have these EVs, and they are just cutting capital and taking a shortcut to really build out their EV network.
Tesla, which has $22 billion in cash, is aggressively expanding its network and adds new locations nearly every day. The company is working on quicker charge times, as well as a trip planning feature that optimizes supercharging site utilization. Bringing in more recurring revenue via superchargers can only add to the Tesla's growth momentum at a time when GM and Ford both say their EV programs aren't profitable and won't be for at least another year. Details on revenue were not released by the companies, but Piper Sandler estimates that Tesla could add upwards of $3 billion in charging revenue from non-Tesla owners alone by 2030 and $5.4 billion by 2032. Thanks for watching. Like, share, and subscribe.